August 25, 2023. This is the S&P 500 Key Futures Mini on the 2000 tick chart on the NinjaTrader 8 platform. You can look down at the timestamps below to see where I saw setups. I didn't take any trades today, mainly because I was away from my desk for the better part of the entire trading day. So this review was actually after the market had already closed, and I was able to get a glimpse of what happened. And even though I went bar by bar to try to simulate real-time trading, I know it had been biased by what I already knew was going to be kind of this gigantic trading range from the top of this red panel here to the bottom. But the pre-market was formed by this sub-gray one. So I'm going to go through the trades now. There were some setups that I saw, but again, it's hard to definitively say I would have taken those trades, mainly because this is after the fact. On top of that, when I'm going bar by bar, it doesn't have the same pressure and anxiety that you would usually get in real time, because when candles are forming right away, you don't really have that much time to decide if there's an entry or not, because a 2000 tick candle or bar could close very quickly if the market's super volatile. So again, even though I mark some certain trades as possible setups, it's hard for me to know for sure I would have taken those setups or not. So I'm going to go through the trades. Hopefully this is rather quick. There's only two, well, maybe three pieces of economic data that came out, which was at 7 a.m., which is the consumer sentiment, as well as the Fed chair was Fed Chair Powell. So around 7 a.m., consumer sentiment came out, and then around 7:05, about right here, Fed Chair Powell came out and said some statements, and then later in the evening, well, later in the day, I guess, the Jackson Hole Symposium occurred, where various Fed presidents would come out and say various things. So it was kind of a choppy day, but overall it was kind of this gigantic trading range. So the first setup I saw, again, this is after the fact, so this can't be. It's hard for me to say I would have seen these setups in real time, because in hindsight, you have time, even if you're going bar by bar, like so, you have time to really think about the trade. Whereas in real time, these candles are printing in real time, so you don't have that much time. But nevertheless, I went through the chart and just kind of looked at where I thought I saw setups. So this is a pre-market, which I don't trade, but I did see a nice setup here. There's a new high, first entry long, second entry long. Now this is actually technically your signal bar, but then it made it to another candle, which is a lot cleaner, a lot better as a signal bar. So even though this is pre-market, if this had set up in regular trading hours, I think I would have taken this trade, or this would have been a worthwhile trade to take. It's a good signal bar. It's kind of a symmetrical break above this ascending channel here. It kind of made a complementary symmetric side here. And even though it's below the EMA, it might have been worth a trade, because this candle here is only about 2.5 ticks, actually a little bit less than 2.5 ticks, about 1.5 ticks. So you can see it went from 43. Excuse me, it's about 2.5 points. So it is a little bit riskier, but I think I would like this trade just because it went one push down, two push down to the other side, and it looks like it's coming right back into the channel. So then prices continue moving up. I saw another setup here. It's a new low here. First of all, you have the first entry short, one tick just below, pulls back, and then creates a second entry short. Now, second entry short, I don't like this setup as much to go long, because it's near the top of this potential range created by the pre-market, which is here and down here. Technically, this is the low, but I like that there's more confirmations down here. Plus, I wasn't going to worry about where the lows here were until I actually see prices coming back down. Then I might take it into account. But what's important right now is the highs, and it looks like it's pushing right up against it. So it could be a potential fail breakout here. Prices could move right back down. So that's why I left it. Well, again, I couldn't have left it alone, but that's why I probably would have left it alone. I would have wanted to bounce off the EMA, but stronger close to feel a little more confident. Then prices look like they're following into this channel pretty nicely. You do have a new high, first entry long, second entry long, but there's no real setup here. I don't really like this because it's already breaking out of this channel here. So it also was within this range. If this candle had actually closed right above the EMA, I probably would have considered taking that as a trade. Then it kind of consolidates in this trading range, getting pretty choppy. Then you have a new high here, first entry long, second entry long. It's a terrible signal bar, so you gotta leave it alone. Kind of looks like it was sloping down, and it still falls into this trading range. It has these two breakouts, and it flashes up. Now, this is right here, right at 7 o'clock is where the consumer sentiment news comes out. So it gets a little bit choppy. You don't know necessarily it's going to go up or down, even if the news is good or bad. It could go up on bad news, go down on good news. So you really don't know that. It can be counterintuitive, and prices continue. So I'm just kind of staying out of this. And I also knew Fed Chair Powell is going to come out and make some statements right around here. But I just still draw things just to see if there's a setup. And this is still pretty close to when he's still speaking and markets absorbing what's happening. But I did see a setup here as a new low, first entry short, pulls up, goes back down, second entry short. And I see this as a second entry short failure on this candle. And prices are kind of congested right here. The failure formed below the EMA, so it's kind of risky to go long because the failure, ideally you want the failed second entry short to be above the EMA to feel confident going long. But since it formed below the EMA, it feels a little risky. So, I don't think there's a worthwhile entry here because it's also the first break of this channel coming down. It's the first break, so you would think it's going to come back down and test the lows. So the first break here, you could argue this is the first attempt to try to test it, but they can also make a second attempt down. And this is what you see in real time. So you're not really sure. It flashes up and you're not really sure if it's going to come back down. When prices move up, I do see a higher low confirmation here of this failed second entry short. So it's first entry short, second entry short. And if you're thinking of going long, which I don't think I would have because it sounds very risky down here, you would want and you didn't decide to do it, you were looking for a higher low confirmation. You technically get a higher low right here. After this candle closes, then you know this one was a higher low. Now this one is a bullish bar, but it's kind of bearish in that it closed below the open. However, it's kind of being overpowered by the bullishness because even though it's only one tick away, you could consider this a decent entry that prices may continue to go back up. But I didn't like that there's a micro double top here. And it looked like, you don't really consider this as an effect because it wasn't coming down to the bottom, pushing up to here. So you really only have this as a potential resistance. I mean, you could say, there's another resistance here, but that's hard to argue because you're already flashing down. It just happened to open here. So I wouldn't, draw a resistance from here over to here. I would just start it from these two. So anyways, it has a higher low confirmation, but I just didn't really like this. It's also potentially pushing up to the top of this not pushing into the top of this pre-market highs, even though it kind of was outside it for a while, pushed back through. I just kept that in mind. Didn't really like this setup, so I don't think I would have taken that kind of trade. Prices move up. It looks like it falls into the shortened trend channel going up. It flashes back down. I couldn't really find any real information of why this is happening other than every so often not Fed chair, but a Fed president will come out and say something. Looks like it makes a break and it creates a new low. So you're thinking it went down, break, new low, but you could also see this is one big leg. So I wasn't really sure if this was actually just one big leg, although it fit nicely here. You could argue that it was probably maybe a bigger leg here. And not knowing exactly which one it is, I just kind of sat on my hands. And I don't think I would have taken a trade. And I'm watching price action continue being choppy. Kind of falls within this channel coming down. This EMA is holding prices down. This is kind of something when I mark for myself. Again, I don't know if I would have seen this fast enough in real time, but I saw this as a new low here, comes up, creates a first entry short right here, one tick below, and it's hard to tell, but this is actually one tick higher. So this is the high here is at 0.5, and then the high here is at 0.75. So it actually makes one tick higher here. So it's actually first entry short, pulls up, and it immediately comes back down, engulfs this entire candle, makes a second entry short. Now, this isn't really a trade. I mean, you could say, there's a third confirmation bounce, but this isn't really a trade because you don't really have enough room to scalp out before you hit the potential bottom here. And ideally, you wanted to have been closer to the EMA. I mean, it would have been an aggressive entry, but I marked this for myself just because I'm trying to get better at finding these hidden second entries. So this is just more for myself. And then you actually have a new low here, makes a first entry short. Actually, you can start a new low here, makes a first entry short, sets up, and makes a second entry short. By the time this candle closes to confirm you have a second entry short, it looks like the trade has already left you. So it's not really a good signal bar because it's kind of neutral bullish. And even though it came up, you could say it rejected off the EMA, and you're not really sure until this bar closes. By the time this bar closes, you could try to put an entry one tick below this guy, or if you were ambitious and you had enough room, you could actually put it one tick below this guy. However, I wouldn't have done that just because you're coming into a potential support here. Looks like it kind of comes back up, and now I see another setup. I see a new high here, first entry long, second entry long, and there's also a triple test, moves one more candle, flashes down. Now you have a failed second entry long. Now, depending on how aggressive I would think this trade would be, it kind of closed bullish. And I thought there is a possible trade because you do have a rejection by the EMA, a possible triple test, and there's enough room to the bottom. So you'd have to kind of put it one tick down here. But it does seem a little risky because this one closed bullish. And as you can see, it looked like it would have worked. Again, with the benefit of hindsight, you thought, okay, well, I definitely would have taken that. However, I don't know that I would have. Prices continue chopping into this range. And it looks like it breaks out, comes back in, keeps chopping. Looks like the range is failing, and now it's coming back down, and it's kind of falling into the shortened trend channel coming down. It's a pretty nice move, except there's no real clean way to enter it. I do see a second entry short here, new low here clearly. First entry short pulls up, second entry short. Now this is a second entry short. I actually thought this was a decent setup, good possible trade, because it actually went one tick, it went up. So you look like it's new low, first entry short, second entry short just below. Now I would be a little weary because it didn't close strong enough, but it did take one tick below that it might actually reverse. Could make a new low, new high, first entry long, and then potentially next candle could make a second entry long. So I definitely would have waited. And when this one flashed down, I would have been pretty confident there was like a first entry short, second entry short, confirm. This one was confirming a second entry short, but it's a terrible signal bar. So I would have treated this as a signal bar. And when I saw this one close, I probably would have tried to sneak in my trade probably at the lows of this candle. And it looked like right here, I wouldn't have gotten filled. So I would have had to been more aggressive and actually put it one tick below this one, which I consider the signal bar after this terrible one. And this one I probably would have gotten filled, but even then, this trade happened relatively quickly, so it's hard to know for sure because you can see the timestamp 7:53 and 16, and this one closed at 7:53 and 43 seconds. So this is like about a half-minute trade or half-minute candle. So I thought it was a good setup, but in real time, it's unsure that I would have actually been able to successfully jump on this. So then prices continue moving, goes down. There is some second entries, but there's not very clean ones. I do see a hidden second entry long. So I saw a new high here, first entry long. Now, this one, when it comes back, it breaks down below and comes right back in. So on the life of this candle, it creates a second entry long. However, even though it's created a hidden second entry long, I don't really see a trade here because it's below the EMA. Going long below the EMA feels a little bit risky. It looks like it is bottoming out, but you don't know that for sure because you could have argued that this looked like it was bottoming out at the time. And even then, you could have argued that this looked like it was bottoming out. And this one for sure flashed up, but then here it looked like it was bottoming, then it flushed it down again. So you don't know in real time that it's going to happen here as well. So I definitely had to leave it, look at it and say I would have left it alone. And I see a new, so it's like a new low, first entry short, second entry short, failure. This is a lower high confirming the second entry long that was hidden here. It does feel, a little convoluted, a little more interpretation required. I do like that the price is pushed out of this trading range because it's just kind of just pushing right here, right? It closed above the EMA, which is another thing going for it. And the other key entry point is I did think that there would have been a trend that I would have found here as a potential support. So I had like three key entry points. EMA is holding, that's one. This one's coming up, that's two. It is pushing up and out of the trading range. And when I was trying to replay this in real time, or not real time, but simulated real time, it looked like it was pushing out of the trading range here. Of course, I extended it here just to be sure. Then looks like this trade would have worked out for a quick scalp. Then prices continue moving up. I don't see a good entry, but I did see a long trap because I saw a new high here. First entry long, pulls back. second entry long. You're thinking of potential second entry long. So if you were thinking the EMA is going to hold, this is the first time it touched the EMA after it broke out, had this strong trend up. I didn't think. I think I probably would have gotten caught if I was trading this in real time because I probably would have put my entry either at the top of this high of this candle or one tick right above because I would think it wants to test the high. This candle likely would have filled me and immediately stopped me out all in the life of this candle. So that would have been like probably a trap that I probably would have fallen for. If not, this candle definitely would have stopped me out. And if not, this one for sure. There'd be no reason for me to be holding on to a stop, by that time. So I would have been stopped out for sure by this point. Prices continue moving down, kind of chops around. I don't see any clean setups. Technically, you have a new low here, first entry short, second entry short, and technically you have failure. So, but to go long on this failure feels a little bit risky because you're right below the EMA. Ideally, it would have formed above the EMA. Then looks like it would have worked. Prices continue moving up, falls into this range. I see a second entry long here. I thought the second entry long was actually relatively decent because it's a new high, first entry long, second entry long. Now this is the first break of this short and trend channel. You had one push up, and it looked like it might make a second attempt to go up. And it looked like it's close enough to the EMA to consider it a bounce. Technically it's not touching the EMA, but close enough. So it might have been, good enough for a trade. It looks like it would have worked. Continues up. There's a small little consolidation here. Technically, you have a new high here, first entry long. Technically, you have a second entry long here. So it's first entry long, second entry long. This is a signal bar. It's too congested because you're going to run into the high. I wouldn't have taken that trade. You also have a new high here, first entry long, second entry long. Again, it's a good signal bar, but you're below the EMA. It's getting a little choppy, a little bit too convoluted. I would have stayed out of this. Prices continue moving down. It's clearly back inside this pre-market high-low trading range, but at this point, it doesn't seem like it's respecting it all that much. So I didn't really consider this top or bottom to be any valid entry points unless a perfect setup came up and it just acted as another key entry point. However, it didn't happen. So then prices continue moving up. It looks like it falls into this choppy, ugly trading range, breaks out, moves up, goes into this short and trend channel coming up, breaks out, makes a new high, comes back down, bounces off the EMA, continues. It looks like it is kind of getting rejection off the top of this pre-market high. And it comes back down. And I did see this as a potential 2 legs down. So I saw, even though it's a new high double top here, that first entry long comes back. I'm thinking potentially second entry long, especially when I saw this candle. But it is inside one, so I didn't like that. This one would have converted the second entry long. But the second entry long, it just feels a little bit risky because I have 1 leg, 2 leg, and it looked like I had one gigantic push up on this leg. I'm not really sure what's happening, so I didn't want to venture to believe I would have taken a trade. I probably would just sat on my hands. Looks like it clearly would have worked, but clearly would have worked on something I wasn't sure of. So I would not be able to really digest or kind of think back of thinking of what would have happened. Then prices continue moving. Kind of chops. It does respect the top of this pre-market trading range. So I'm just kind of waiting, watching now. That comes back down, comes down. It falls into this ugly trading range, but if it's too ugly of a trading range, I'm not even sure it's a valid range anymore. But it's just something that looked like it was kind of having some respect, at least at the bottom support, somewhat at the top, but it felt a little weak. Prices continue moving up. I don't see a clean entry anywhere, and it just kind of gets choppy. You only have a lot of first entries. Goes in, technically you have a second entry here, but it's very, very close. There's like a new high here. First entry long, it's actually one tick above here. Then you actually have a second entry long made here, but this is just too congested. Look at the size of these candles. They're pretty much moving within, a very, very tight range. So definitely, even though there's a second entry there, it is not a high probability second entry. And then technically you have the same thing happening here. You have a new high here, first entry long. You technically have a second entry long. It's a fantastic signal bar, but the setup is not as clean because you're already pushing toward the top. You could argue that you have a very obvious bullish trend going up and you would take it, but I feel that would have been aggressive. Had this actually been closer to the EMA, then it would have been worth considering. But it's too far from the EMA. There's not really enough room to scalp out. I would have let this trade alone. Prices continue moving, chops down. It breaks out of this yellow channel, but this yellow channel, I'm not too sure of the validity. Comes up, and I did notice it created the second measured move. So it's actually from here, one leg up, then it looked like it chopped around, then made a second leg up. Then prices continue moving. Chops, you do have a new high, first entry long, second entry long. This is a signal bar, you're not really sure. Prices then chop out of the range, kind of consolidates, comes back down. I do see this as a new high, first entry long, second entry long, two legs down. Looks like there's a triple test. And for a second entry long, this looks like a pretty clean signal bar. So this is something I think I might have taken a trade, probably just one tick above, because I would think it touched the bottom, went to touch the top, came back down, touched the bottom. Now it might go back up, touch the top. Looks like I would have gotten filled, and I probably would have gotten stopped out on this candle. So that would have been a frustrating trade. Then, it would have eventually worked its way back up. So this is like a really, really tricky trap. Prices then continue chopping down. Looks like it's getting really choppy. This is getting toward the end of the day. And as you can see, like this is the last 10 minutes, how many candles are being made. This is just people closing out their positions. It gets super duper choppy, and I would not want to have been trading within that noise. So that's kind of how it turned out today. It was pretty interesting. Again, I didn't see this in real time, so I know that my analysis is definitely got the benefit of hindsight. But just looking at the price action today in real time, I think I would have gotten probably trapped here if I took that trade. As I said, just enough to kill me. And if there was another trade I mentioned back in here, that would have trapped me because I probably would have taken it. So hopefully that was helpful.